This is tactical. It's not fundamental. What's the big push behind it?
Yeah, that's exactly right, Jonathan. That, on a secular basis, we continue to think that exactly the conversation you were having around the high quality, high growth names in the U.S. tech sector and adjacent to the tech sector have some very powerful secular tailwinds behind them. But tactically, over the next 6 to 12 months, the headwinds are stiffening, and we think it's going to be a challenging period for the U.S. to continue that outperformance versus rest of world.
I always find that a lot of this has to do with identifying the changes in mood, investor moods, as they swing from the US towards Europe. Do you need a PhD in psychology or economics to nail this one, Mike?
How about both and? I mean, I think that it's exactly right that from an economics perspective, I think the case for a bit of a rotation towards Europe is pretty strong. They've robustified their policy framework pretty considerably. We see policy risks in the U.S. On the public health side, it looks like they're going to get a much more robust restart of economic activity because of a strong public health response. Here, obviously, the signs are somewhat more worrisome, but you're exactly right that market sentiment, market psychology is also an important ingredient in the short-term picture, and there, the U.S. has really benefited from those tailwinds behind the tech sector in particular.
Mike, coming out of a lot of downturns, the argument is often made as risk recovers worldwide, you'll see risk appetite really improve in places like Europe and the rest of the world versus the United States. What's original about the new conversation in the last week or so is the belief that we can have a situation where the US and the recovery starts to stumble, but risk appetite remains elevated in the rest of the world. Is that a world that you can imagine, Mike?
That is, and I think it's important to point to a slight nuance in our positioning. So, we're overweight quality and growth on a global basis. That includes some of the U.S. tech names. But we think that when you look at the U.S. market broadly, when you move down the capitalization stack, when you move into some of the less favored sectors, that's where those headwinds are going to be more pronounced. Whereas globally, where we see a cleaner restart in activity, where there's still a significant concentration of high quality names, those are places that we see likely to outperform as we move ahead over the next 6 to 12 months.